Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, April 17th, 2023. It's now the 15th. We start off in the S&P 500 daily chart into DeMark looking back to end of December 2021. I'll zoom into the current area now. I've added the Stoller Average Range Channel or starc bands here in black to go along with the channel 3, and you can see a good example here when price goes under the starc bands and below the lower channel 3, that it's a good opportunity to reverse to the other side. So it really takes a lot to penetrate a starc band, as you can see by some of these candles. Average true range, and you can see up here to the upside it went past the channel 3 high here and nailed the top of the upper starc band and then headed down. I'll add all the other indicators now. The S&P 500 daily chart has printed the combo and sequential sell setup 4 count. And to negate that for end of day on the 17th, there must be a close below 4108.94 for the price flip to the buy setup count 1. And going back to the starc bands, the middle band is a 9-period simple moving average. And price nailed the 50% qualified and confirmed propulsion exhaustion up. And that's an indication of potential upside to continue. So we'll see what happens as price ended up back under the disqualified buy TDST level for the close Friday. The buy TDST level could become qualified with an end of day close above its level at 4147.60 for end of day Monday the 17th. The cloud conversion line has been very good support. You can see here these 3 bars nailed it and then bounced. So let's see if that can continue, or it could be considered knocking at the door, and the 4th time could be the charmer. But usually if it survives 3 knocks at the door, then there's a good indication that it's going to hold some more. The daily high channel 3 is at that level, and right above it is an ongoing supply line, and with a close above that level end of day Monday, it will become qualified. And then the upper starc band is past that supply line there. So the best thing about the starc bands is that once they come close like this, it continues to move up. So to the downside again is the conversion line, and now the starc band middle band at 4112.91, so there should be pretty good support there, but break through it and a close below this level of the demand line will become qualified for end of day Monday. And new trend factors are printed. Here's the first one, disqualified down 1 is right underneath that demand line, which for today is 4078.43 for beginning day Monday. And this ongoing supply line for Monday starts the day at 4192.14. The S&P 500 weekly chart looking back to the COVID crash era. I'll zoom into the current area now. The S&P 500 weekly chart has printed the combo and sequential aggressive sell setup 4 count. And to negate that for end of week Friday, the 21st, there must be a close below 3970.99 for the price flip to the buy setup count 1. And that's somewhat near the middle Bollinger Band 39 simple moving average at 3961.07. So there should be some pretty good support there in case something major happens. The conversion line is inching downwards towards the baseline baseline is holding its own at 3917.05, but the conversion line bumped down a little bit from last week. So pretty good support in that area between the middle band of the Bollinger Band conversion line. And the really big disappointment in the weekly chart was the momentum up level not becoming qualified, so price ended up a few points under their end of day Friday. So that disappointment coincides with the disappointment of not getting the daily TDST level qualified, and the weekly ongoing supply line for Monday will start the week at 4135.93. So if price can open where it closed for end of day Friday, it will be an open above that ongoing supply line, which again for Monday is 4135.93, and for that matter the rest of the week at that level. And that would start off the week qualifying that supply line that's ongoing now. And again, in the weekly chart, we don't pay attention to qualified supply lines, but in this case, because it's very close to where a daily ongoing supply line was, we're going to pay attention a little bit closer to that qualification process and possibly confirming 2 weeks from now. So while the ongoing supply line has a good chance of becoming qualified to start the week on Monday, the momentum up level will have to wait at least a couple of weeks because it did not become qualified when it had its chance. And it takes a lot to get a level qualified, let alone confirmed in the weekly chart. There was an up close on the week of the 26th, followed by a down close on the week of the 2nd. So it would have really needed to close above that level to get it qualified. And at least for now, until the level changes, possibly on Tuesday, price, the ongoing supply line, and the momentum up is right on top of the channel 3 high here at 4140.36. So unfortunately, the way I see it, it's going to take a really good news report or some sort of great headline to move the S&P 500 up for next week. It might creep up a little, but skyrocketing, I don't think so. We'll run through the NYA top caller chart as fast as we can. The NYA to SPX ratio has basically been going sideways, and value tried to break above that solid red line here, but then there was a growth spurt to the downside. So just sideways, either everything's doing good or everything's doing bad. The New York AD line, I drew an ascending triangle pattern here, so it can reach the top of that maybe and get past that. The New York ratio adjusted McClellan breath oscillator is forming a nice complex pattern well above zero, meaning a lot of up and down above zero, just like back here in this area till it fell off of the face of the earth. NYA price is holding its own. It's in between support and resistance levels here. And the ratio adjusted McClellan volume oscillator is similar to breath, complex pattern above zero. Most importantly, the New York summation index of the ratio adjusted McClellan breath oscillator has broken above zero. It's getting close to the positive 250 line. That would be a milestone to get above that. Same thing with the ratio adjusted McClellan summation index for the volume oscillator up here. It broke above zero, so that's a good sign. Our SI14 came close to this 60 green line and was turned away a little bit. It's well above its 21 EMA signal line, and on balance volume is above this downtrend line in dashed red, so that's a good sign too. And the New York stocks only AD line and its McClellan ratio adjusted breadth oscillator here. We can't call this a divergence. We could consider it an indication. So here we have the AD line headed up on the top side, and the ratio adjusted McClellan breadth oscillator pointed down on the top side. So what that indicates is price is going up, but the breadth is going down, so not too many participants. We'll go take a look at price real quick here, and you can see that price has been going up from this line straight up, and that coincides with the AD line, but the breadth is heading down. So that's similar to back here with this AD line headed up, breadth headed down, and that went on for quite a while. And then you can see that right here, right at that top of that arrow, price fell off the face of the earth. So that's something that bears monitoring, and I think we will during the week to see what happens if it gets longer in the tooth like this divergence back here or indication, and we'll see what happens. And then conversely, the blue arrows, which should indicate bullishness, AD line was somewhat headed down, but breadth came in pretty strong. And we'll go look at price here, and then you can see right where it started going up at the end of that divergence there. So breadth won that battle there. So that's an interesting relationship, this AD line for the New York and its ratio adjusted McClellan breadth oscillator. And the intermediate term volume oscillator is looking pretty good, above zero, somewhat headed straight up. Same thing with the breadth oscillator, maybe not as strong, but above zero and headed up and to the right. And I'm actually glad to see the stocks in the NYA above their 200 simple moving average going sideways between the 50 and 60 area there. So right in that zone going sideways. I hope that continues for a while, because that would mean we're having a pause before the next leg up. The NYAD overbought oversold indicator shows the 30 EMA in green taking a rest right on top of this green horizontal line here at 200, and the 10 simple moving average in dotted red is headed down to around in the same area. And the NYAD overbought oversold indicator is the best of the worst when we're comparing it to this NASDAQ AD line overbought oversold indicator. You can see the green 30 EMA line is below zero and below this support right under zero and headed down, along with the 10 simple moving average in dotted red. It's below 0 too. The NDXHILO for the NASDAQ 100 shows it's the same as the last couple of days. The NDXHILO index in dotted still going sideways, and the blue 5 EMA still above the red EMA 10 here, and the red is almost going sideways now, and the ROC 12 has gone under zero a little bit. It's at negative 0.94, So if this 5 crosses under the 10 EMA here, and this is more than positive 5 or less than negative 5, then that sell signal will be ignored. However, that might change for Monday as the KST short term is below 0 and headed down, and now the intermediate term KST has a more pronounced rollover to the downside, so we have 2 going down here and the long term headed up, so somewhat in check but leaning towards the downside a little bit. The NASDAQ composite high-low chart, NAHILO, is just about the same as the previous video, except for the 10 EMA is now back above the 21 EMA in gold, so the red is just barely above the gold. Red 10 EMA 2804, gold 21 EMA 27.98. And the New York high-low index is just about the same as the previous video, except maybe just a slightly more pronounced indication of rolling over for the 5 EMA today. And the index in dotted here maybe a little bit more pronounced rollover to the downside also. The US dollar daily chart shows the low for Friday around 100.40 was right around the previous low back here for the beginning of February, 100.68. I'm still looking for it to hit this 99.84 area from support back here, break that, and then the next one down is 97.84, and you can see the dollar diffusion indicator from Martin Pring has rolled over and is below its 21 EMA signal line, so I see more downside for the dollar in the future. The ROC 1, ATR 2, and PPO Extreme chart. I'll zoom into this current area now. I wanted to take a look at the volatility and how it's simmered down this past 7 or 8 trading days. You can see the ROC 1 after a couple of forays above the positive volatility line. That ATR 2 really simmered down, so it spent 7 days in the green zone right around neutral. We had one day the other day above the positive volatility line at 1.0, and then it came back down to 0 recently, and you can see that the ATR2 on that bump up for the ROC 1 above 1.0 really didn't amount to much. It jumped up the next day, but it still stayed under the 50 line. So I like to see that. Volatility is really simmering down. And the PPO Extreme chart is still above 3% above this 0 line here. And the stocks above their 20-period simple moving average in the S&P 500 is still holding its own up there in this green zone. It's above 70, and that's still looking pretty good there. And the S&P 500 AD line is bumping up against resistance on this solid red line here, but it's knocking at the door to get above it, and it's still in between that and another support and resistance line in dashed red. Lately it's support and resistance there, so maybe in between these two is a range and a pause for a while. And the MACD is still headed up. I should extend this dashed line with the arrowhead on it. and it would be a target to the upside for the MACD, so it still has a ways to go. The RSI 14 is going sideways right around 60, just like the NYA, and the on-balance volume is holding its own. It's still above its 21 EMA signal line. Looks like there's a pause here as there's lower peaks. The S&P 500 2-minute chart shows that price absolutely nailed the top of the range at 4163.19 on Friday. The S&P 500 support and resistance levels big board shows the gray areas at the weekly ongoing supply line, weekly high channel 3, and the disqualified by TDST in the daily chart, along with the pivot point. And price for the S&P 500 at the end of aftermarket hours on the 14th Friday was 41.46. So to the immediate downside is another significant jump if it decides to head down. Daily conversion line 41.17, S1 41.13 should be okay support, you would think. And to the immediate upside is R1 41.63, and the top of the range 41.64, and this top of the range has been there on this chart for over a year and a half, possibly 2 years. Get through that level and it's to the upper part of that 4100 range. There's a daily Bollinger Band upper band, daily high channel 3, daily ongoing supply line, weekly 2018 broadening top and dashed red, uptrend line, and R2. And the New York traditional McClellan breath oscillator to get back to zero would require 1,673 decliners over advancers to get back to zero. Took a significant jump down towards zero from yesterday. Have a great day.